Hey guys, so this morning, May 3rd, 8:30, the job report just came out, and it's a miss. As a matter of fact, it confirms the case, the stagflation case, again. So with every piece of economic data, it screams stagflation, which is very bad for the market because it takes us back to 1973, 1974, 1975. We're going to take a look at unemployment rates during those years in just a second, but for understanding today's report, the number is 175 jobs were added. The expected number was 238,000, and basically it's like a 25% miss. Of course, they mess with that number all the time. In reality, the number might have been negative. They've been fluffing these numbers right and left, but the fact that as much as Biden needs these numbers to look good, they're not able to masquerade them anymore. So the number comes in much lighter by about 25%. The unemployment rate, it is up from 3.8 to 3.9. But in reality, unemployment rate is probably like 10%, okay? But this is what they are reporting. So the numbers are not going in the favor, in a positive direction for everyone. The numbers are actually slowly deteriorating, slowly but steady, because not so long ago we were at 3.7, then we went to 3.8, now we're at 3.9, and let me show you how does that correlate with the history. So there are two time intervals to focus on the history. One is this transition from 69 to 70, where basically unemployment doubles. So the number was pretty close to where it is now in 2024. Back in 1969, we're a little bit lower, 3.5, and within a matter of months, unemployment doubles to 6.1%. The instance that we're highly interested in, as far as historic analog, is this one right here, where from 1973, unemployment goes from 4.9 to 7.2 to 8.2. And so it is this transition from 1973, which would be the equivalent of what's happening now. So transition from 2023 to 2024, as you can see how quickly these numbers can change. And so what happens on the chart when the market goes and rolls over from 73 to 74, within 6 months it drops 30%. And this is at the same moment, this is what's happening with the unemployment. So just a day ago we had a press conference from the Federal Reserve where Powell basically was laughing at the fact that stagflation was impossible. But yet the data that we're getting today, again, it is slower economic growth. It is a slight increase in unemployment. So there's now more unemployed people. There's now, less jobs that's being created in relation to the expectation. And so the trend, the direction of unemployment is trending higher now for quite some time, while the market has not caught on to that trend yet. And so we're about to go from probably 3.9 to a similar situation to like 6.1 unemployment, maybe even 7% over the course of next 6 months, similar to the way things happen here. And with that, when you're going to be looking at the charts, despite of what the charts are doing right now, so the way the market is interpreting this situation right now, well, the wages have stopped going higher. What is that? That's a slower economic indication. It's an indication that things are not as good as the market has been pricing things for the last 6-7 months. And so there's going to be a moment of pure realization that the market has been wrong, and this is indeed stagflation. So expect some major reversals to the downside. This is not going to be pretty for the markets over the course of the next 6 months, guys. The numbers and the Fed, this is how hypocritical it is. The Fed says, well, we're data dependent. They're not fucking data dependent. Or that's not like, they're not, I don't know what data they're looking, because every data that comes out says stagflation. You got high inflation and slower economic growth. It's stagflation. And so look, 72, stagflation, all of these recessions around here, all these big drops in the market, 30%, actually over 30%, it was 73, 74, 75. Then recession ends in 1975. So this is the kind of shit the market's going to be going through. So be ready for it, okay? This is not the time to buy calls. I mean, this is an ideal moment to short some stocks that are still trading close to all-time highs, because a lot of these stocks will drop. The market, the index overall will drop within the next 6 months by 30%. But some stocks will go down by 60%, 70%, 80%. Some stocks will go down by as much as 90%, okay? And yet I have people are asking me questions, well, Leo, what do I buy for my retirement account and that's a good stock that I can just hold on to? Why would you want to do that? Okay, the market is going to crash 30%. You should be looking right now for an opportunity, okay, to short a stock that you could safely hold for the next year and make sure it drops down 70, 80, 90%. Okay, that's how you can substantially increase your retirement account. It's not by buying stocks at these crazy levels when history tells us it's a rollover from 73, 74, 75. This is not the time where you go long in your retirement account. That is the craziest fucking thing you could be doing right now. So guys, don't let the market reaction, the initial reaction is often not the true reaction. So the market's going to be in the green when it's going to open up. They're reading this as like, hey, the wages are down, so maybe that's an indication that inflation pressure could be alleviated. But look, that's got nothing to do. That is tied to more that, okay, people are just earning less. Okay, the people are losing jobs, and finally they can no longer hide these numbers. So we're only seeing partial truth. The reality is going to be probably over some of the summer months where the market will get shocked with how bad the actual situation is. Because you cannot, ignore that every company, every major company, Amazon, Tesla, look, the list is like hundreds of companies been laying off people every fucking day, okay? But yet, unemployment rate is only ticking higher from 3.8% to 3.9%. We know those numbers are bullshit, okay? The real unemployment is more like 10%. But as long as they're going to be able to fluff the numbers, hey, the market's going to be cool. But there's going to be a moment this summer where they can't hide those numbers. There's going to be a big jump like we had in 73 from like 4.9 to 7.2, and it's going to catch the market off guard. That's how crazy it is. So, guys, be on the right side of the market. Big 30% correction in the market in the next 6 months. Trade it on the right side. Do it with a 30 market moves coach. There's some crazy bargains that could propel your account into stratosphere if you pick the right shorts right now. So get in touch with us here at 30 Market Moves. Visit 30mm TV. Click the link below this video, guys, and make sure you do not miss the 500X meme coin, which will be launched in the next 48 hours. Sign up at 13marketmoves.com to make sure that you will get notified as soon as we're launching this project, guys. Let's roll.